The original concept for market profile is to take each half hour of the trading day, assign that a letter, and then organize that into a bell curve, or what's called a market profile. Here's what it would look like if we assigned a letter to each 30-minute period of the day in a candlestick. So this is how we construct an original profile. First, what we want to do is we want to take the high and low of each half hour of the day and assign it a letter. So this is the first half hour of the day, then the second, and the third. And you can see that each half hour is assigned a letter. With market profile, we stack those on top of each other, and what we're allowed to do there is to track time and price. And this shows us where fair value is, or an area where buyers and sellers come together most often. In other words, it's a proxy for tracking volume. We use letters to distinguish time frames in daily profiles, but in macrographs we're going to use color. And you can see there's a consistency with the colors where the first day of the week, Monday, and the first week of the month, and the first month of the year are all the same color, just as the second day of the week, second week of the month, and February are the same. Wednesday, week 3, and March are the same color. This allows me to see patterns in daily profiles, weekly profiles, monthly, quarterly, even yearly profiles. So this has really helped me recognize patterns over the years. One of the more powerful momentum indicators is that first hour trade in the daily profiles. Often you'll see highs and lows made in that initial hour. Well, that holds true with weekly profiles when markets are trending too. You tend to see high in a downtrend. You tend to see highs made on Mondays and lows made on Fridays. When markets are going to reverse, they have more neutral profiles where you see lows on Wednesdays and highs on Thursdays. So those depict neutrality. In this example with the crude oil chart, you could see that the market here closed above the high volume price, had a high on Friday, low on Wednesday, then the next week it made its low on Monday, trended higher, then it coiled up for another week. Then you see the week after that you had a low on a Monday, and then another low on a Monday, and then the market went into a coiling phase. Another thing you want to look at here is how the market closes in relation to that high volume price of the week. A close above the high volume price tells you that buyers are still in control. In this last chart we're looking at 10-year notes by month, and what I wanted to point out here is how often an extreme was made in that first week of the month. Now we know the first week is shaded purple, and here you see the first week was the low for the month, and again here was the low for the month. Here the low was set shortly after that first week. Week 1 low here, week 1 high, week 1 low, week 1 high, week 1 high, week 1 high. So you can see how often that initial period can set the tone for the month. This happens by week, month, day, quarters, years even. What you can do is start to set objectives after that first week, and we'll get into that in another video on how to set objectives.